Hello, it's KaiBFS here. In this video, I am going to review my top strategy that I use to pass multiple profit challenges and get funded all the time. From our data, about 80% of people who watch our videos have still not subscribed. So before we go on with this lesson, please make sure to subscribe to the channel and also click the like button to support us. The strategy I'm about to review is the second L.E model. So first, for an uptrend, you will need either an area of strong demand, level of support, KRMR, and a sweep of a higher time frame low. And then we have to make sure that price has printed on the chart exactly this pattern around any of the zones mentioned above. So here for an uptrend, this is our A level, which we don't expect price to take or sweep out, known as the protected low. And this is our B level, that is the structural liquidity or inducement, the area where the uninformed traders put their stop loss or latent orders. This level must be taken out by price. And here is our previous low, which was taken, and this one is our previous high where price made the first break of structure as seen. This is our second break of structure. B is the turning point. So here we expect price to come and take out the B level and then continue with the trend. In the case of a downtrend, we will need either an area of strong supply level, a level of resistance, QMR, and a sweep of a higher time frame high. And then we have to make sure that price has printed exactly this pattern around any of the zones mentioned. For a downtrend, this is our A level, which we don't expect price to sweep or take out. And this is our B level, that is the structural liquidity or inducement, the area where the uninformed traders put their latent or stop order. And here is our previous high, which was taken out. And this is our previous low where price made the first break of structure. This is our second break of structure. C is the turning point. So here too, we expect price to come and take out the B level and continue with the downtrend. Now comes the question, how do we enter? To trade the L.E model, you first need to verify the structural liquidity or inducement, and we do this by using the Fibonacci tool. For an uptrend, mark the Fibonacci tool from the low to where the first break of structure happened. If the B level on the 50% retracement level, then the structural liquidity is valid. For a downtrend, mark the Fibonacci tool from the high to where the first break of structure happened. If the structural liquidity is on the 50% retracement level or above it, then the structural liquidity is valid. Otherwise, it is not. Now, let's proceed to how to enter the trade, and I will show you rate chart examples from trades I have taken personally. My Telegram community link is in the description. Make sure to check it out to review many trading signals taken with this strategy. To enter a trade using this model, mark the Fibonacci tool from the low to the B level first in the case of an uptrend. And here, we are going to use any of these levels for entry. That is the 50%, 61.8 or 38.2% retracement level for entry. You can pick or stick to only one for entry. We enter just by putting our stop loss below the A level and our target as either 3RR or 4RR. The same applies to a short trade. To enter with this model, mark the Fibonacci tool from the high to the B level, and then we are going to use any of these levels for entry. That is the 50%, 38.2 or 61.8% retracement levels for entry. We enter just by putting our stop loss above the A level and our target as either 3RR or 4RR. And then we wait for price to come and take out the B level and continue in our direction. Now, this is a chart example from crude oil in January 2026. Here, our A level is in confluence with a level of support. Now, let's identify the pattern from here. We have price coming down, previous low was taken, a break, a second break of structure, a sweep, and then a big bull to the upside. Now, we also have to verify our structural liquidity. We mark the Fibonacci tool from the low to where the first break of structure happened. Now here, we can see our structural liquidity is on the 50% retracement level. We also need to mark for our entry and use any of the levels to enter. We are going to enter with our stop loss below A and our target as either 3RR or 4RR. For a downtrend, the same verification is also used here. Our A level is in confluence with a sweep of a higher time frame high. Now let's mark our pattern. So here we enter with our stop loss above A level and our target as either 3RR or 4RR. If you found this video helpful, please don't forget to subscribe to the channel and also like our videos. Now go on to the market and be profitable.